What's going on, guys? It's Josh, and today I'm going to talk about another one of these trades. This is actually a continuation from the last video because you guys saw me when I actually made the play. It's developed. So as you see here, $15 open price. I spent 50 bucks for three of them, and close price $103 each, or 103. So I want to talk about this play, what happened, and really, even if you look at kind of the plays that I made, there's a lot of technique behind this that I really want to highlight for you guys so you see. So again, if you guys are new, subscribe to the channel, turn on the post notifications. That's what I've noticed has been really important. If I'm posting at least at least up to 4 videos a day. So make sure you're actually stayed tuned with these and that you're getting them and keep up with them, because a lot of the lessons I'm dropping in here are staying. And then also, I am going to be releasing a free stock trading course. So get ready. I almost have it ready for you guys to drop. So stay tuned. I'm going to drop it here on YouTube, and I'm not going to tell anybody. It's just going to be in one of the videos. So no, I am going to tell everybody. Don't worry. But anyways, getting into this was RIOT blockchain. And again, this is a two-part play with what happened. How one important part is, spotting this move and what happened with the stock itself and understanding the underlying and all that stuff. And then the next play was the options, or the next part was the options, and then how I strategically maneuver them to make sure I put myself on the winning side of the trade, and especially with options and the timing. So the first thing is, this is RIOT blockchain. And again, in my last video, I explained it's kind of linked to the price of Bitcoin. However, RIOT is its own company. It just, people kind of go crazy off it in general. Now, what I will say with this part of this play, if you guys even watch my live streams when Bitcoin first broke above 7,000, that 2-month high, it's now hitting a new high. Part of understanding what happened here with this play and making money off of it had to do with those levels I was talking about on Bitcoin. If you watch my live streams, if you were on there, you saw me talking about certain break points of 7,400 on Bitcoin, then 8,000, and now the next point is 8,500, which it's hovering around right now. So depending on what happens with that, this is going to get very, very interesting. So that's one arm, that's one leg of the trade. And now the next level, you have to understand Bitcoin helped in this, but now what you also got to understand too is the difference between the longer and short-term options. And you'll see what plays I made to kind of balance and get that. But again, sometimes with these moments, you do get to see the weakness of weekly options, because on any of these plays, if you played the weeklies, except for yesterday, you would have got pretty much crushed after that. It stayed there. And I showed that in my last video, comparing the weeklies to what happened with the monthlies, which I was holding. So getting into the play now, what I want you guys to understand, there's many things that happen. So I got the August 17th, and I still am holding 2 other options on this. I have 2 of these left, the August $8 calls. I'm still holding 2 of these that are in the money now. And then I'm also holding some other ones, which I'll show you after I close out of them. Now, what's going on here is I want you to see what I did so you guys could see it. So if you could read this, it's saying the symbol, how many in related to the transaction, open date when I bought it, open price 19 cents or $19 for you who aren't familiar with options, or if you guys are just starting out. Open net amount is saying after commissions and everything, how much did I spend? And so 200 bucks for these. And again, this order I got 10, and that's something I think will throw a lot of you guys off, because you guys have seen me buy 1 and 2 contracts. Again, that's not always what I do, and I make bigger trades and I'm using bigger amounts, all depending on how much time I'm getting, what I'm getting, and my conviction on the play. Now, you can see when I close it, the price I sold it at, and the open net, and the total gain or loss. So we'll start with these 2 here, because these are important. I bought these at the same time, and you'll notice I bought August 17 $8 calls for 19 cents, but then I bought weekly puts for 5 cents. So essentially I spent $200 to buy 10 of these, but then I spent another $60 to protect against the downside on the weekly. So that is called hedging, straddling, whatever you want to do it. But hopefully you guys can see how it makes sense, where I used 60 bucks to protect my $200. And again, right off the get-go, I knew it was a big run-up in the Bitcoin price or anything, but then the stock, understanding RIOT isn't necessarily tied to Bitcoin's price on a one-to-one correlation, and could drop and you might, who knows what could happen. I'm protecting myself, and if it reverted back to where it opened at that day, and you'll see Riot was at 450 that day. It shot up to a high of $7 almost, or 660, and then it closed even high. Thank God, a higher sixes, but I was protected. If it was easily could have came towards five, and that's what I wanted to protect myself against. So that's why I did that. And now on the $8 calls, I liked them. They had time. But then you'll see as the day went on, I saw right around close, I closed these out for 30 cents. That's not usually the gain I like. But in this case, I realized I had $200 on the table, and I didn't really like the entry price. I thought it was a little too high. Obviously, looking back at it now, it still was great. But even during the moment, I thought it was too high. And it was already up. I knew I was going to lose all my puts. So at close, what I did was I sold out 10 of them for 289, made $90, covered my $60 loss on the puts, and then also that was in my mind, hey, I could sell out, cover my puts, and pretty much have no exposure, limit my exposure. But now that doesn't change the next part of what I did, because now you're seeing these that I sold today for $1 each. I bought them at 15 cents, because when this price, I bought 10 really high, and then the price dropped during the day, I went and I bought 5 more for 15 cents, or pretty much 20% lower. And that was my mentality there. Is like, well, I could go buy 5 now for 15 cents, lower my cost basis, and that's averaging down. So you see, it's again maneuvering that trade to make sure that I'm, getting both sides and taking advantage of the fact I got in quick, I got in high. It worked against me, but then I saw an opportunity to buy more. So I'd be cautious if you're new and you're just starting to trade. Averaging down could be risky, especially on some of these options, and if you buy too high. So you got to be careful. But that's essentially what I did. So that's why I closed out the other 10 that I bought at 20 cents, because I said, okay, well, I have 5 more that I bought cheap. We'll close out the other ones. And then now I'm just holding, pretty much, uh, 5 times 15. It was like $80 of risk pretty much. And now that's why I held them into this week. I had them yesterday. They went up a little bit. Then they popped today. I sold 3 of them. So now you even see I'm scaling back the position. And hopefully you guys see at any moment I can, when I'm up, if I could cover my initial investment, I'm taking it and just trying to hold house money so I could keep going. And that's exactly what I did here. So now I still have $200 worth of these options, but I've covered all my initial investments. I put $252 profit. So no matter what, even if those other 2 contracts expire, I still made $252. But now I could go take another 250 and make, or $200, make 450. But now I get the opportunity to play out the time, let the stock work, and give me more opportunity to gain while also limiting my initial risk that goes into the play. So hopefully that makes sense, that you guys are seeing, and it's easier to see if you saw me do it live, and understanding, because it's one thing, it's easy to see the numbers right now while they're static. It's easy to look back, hindsight's 2020, and in this case, I played it correctly. The numbers are showing you, but it's very hard during the moment to see the options and what exactly they're doing. So maybe I could try to show you, because the options fluctuate a lot and you have to be careful for that. So that's why I'm saying, if you're just starting out, approach it with caution. But why is no link? What link do I have it on? Hold on. Oh, that's why. So let's see. The August $8. Damn, it closed at 863. Dang, so these are at 125 now. But this is what I want you guys to see, is just the pricing of it. And this is just on the daily chart. But if I pull it up on a 1 minute, you might be able to get a better idea, hopefully. Yeah, because I need to show you during the 17th when it all happened. These went from 5 cents, because you could even see between here it fluctuated a lot, and they kept going between 15 cents, ticks up at 40, goes down to 20, and you could kind of see where these trades are executing. There's not much volume. I know it's a little hard to visualize with this, but all along the way, you're seeing, the options are very volatile. So you want to be careful that you're not getting in at the 40, then it drops down, And that's, one is focusing on where you enter and when you enter. But then two, when you average down, it's very deadly because these contracts, again, tomorrow this thing could vanish and you're easily dropping out. If this thing falls out the money, it's game over. So you want to be very, very cautious with that. And even then, I'll even show you something. Look at how much volume went in today. Now people are buying these, 2,000 of the $9 calls purchased, 10, 1,500 of these $10 ones, and you see how expensive these are. I was buying two, and this is why I'm saying, if you guys even want to come into this trade now, understand how expensive these are. The open interval, there was only 260 of these contracts being held. I held 5 of them at the moment. That's a decent percentage, surprisingly. But now with this much volume coming in, you to get that 15 cents, it just doesn't exist on this option chain. These guys, someone got them for 18, but again, bids at 30. You're really not going to get anything worthwhile because now you're saying the stock's going to double, triple, or just under double, but it's a good percentage, 50% right here. And even though it did move 30% in one day, you just got to think now they're expensive. And this is something I'll show you. A lot of you guys ask, why don't you show your trades? Why do you hide them when you post them on Instagram? It's part of why I don't even like having my live, with the TTF anymore, where I was, trading live for 6 hours a day in front of people. Because again, if people see your trades, or in general, this is a prime example, when a lot of volume comes into an option, when demand comes in, and that's what would happen when people would watch me trade, or if I gave my trades away before I made them. You see now, I've already made these trades. I'm fine showing you guys after the fact once I close out of them. But you guys even see, I made this play last week and I'm still holding till today. That's why, it takes me a while to actually execute, especially when I get good time on these options. But now when you see this much demand coming in, it doesn't matter now what the option is. Simply a lot of demand, like again, 2,000, 1,500 contracts being purchased, the market makers are going to jack up their prices. I bought when the stock was trading at 6, I bought a month out more time. There's a week less time on these. I bought a month out almost, exactly a month out to the date, $2 out of the money. I spent, so instead of 850, we're talking, what, 950, 10. I was spending 20 cents 15 cents for these. 20 cents I thought was a bad fill, and I went and I got the 15-cent ones. You're paying 70 cents. So you got to be careful with that, and you guys got to understand how now there's those two parts of what I'm saying, the stock itself and then the option chain. And then this is what I need to tell you guys that you hopefully to end on, and that you really make sure this clicks. Doesn't matter what option you buy. This option wasn't successful because I found a good option, even though I did. You see how securing a price now puts the odds in my favor, and even down to the strategy of taking your money back and, getting your initial investment off the table. All I try to do is make sure the odds are in my favor, especially when you're gambling on weekly options or options that in general are tantamount to gambling. So you need to protect yourself, put the odds in your favor, but it doesn't matter what option I got. The key here is simply the stock went up drastically. It went from $6 to $8 in a matter of a week, which is a huge percentage, 30% in one day alone. That's the two factors. You need to understand and identify the movement on the stock, and then you need to identify an appropriate, well-priced option that is going to yield you the gain you're looking for. So that's what you guys need to take into play. Hopefully this helped you guys. Hopefully you like it. Let me know if you have questions. Drop a comment for me. Let's dive deeper into this, and make sure you turn on those post notifications. Love you guys. Stay in school.